Hello, good morning, option traders and investors. How are we doing today? So today we're going to be talking about Carnival. And this morning I actually ended up getting a few shares of Carnival. Ended up getting a total of 9 shares. And the reason why I got Carnival is because I believe this company, it's a perfect opportunity right now. Considering we just had a crazy run up on all airline stocks as well as cruise stocks, on the whole market in general, really. And we ended up going from $14 all the way up to a run up of 21, which is absolutely unbelievable. And about 2 days later, it had you already know, what must go up must come down. So the stock ended up dropping to a value of $19 around there. So I thought this was a perfect opportunity or a grab for Carnival and Norwegian cruise lines stocks. Basically all the cruise stocks and all the airline stocks, essentially. But I seen Carnival and it's a perfect grab. Not only that, actually, they have a pretty nice dividend yield of 9.71. And maybe right now it's not the brightest or the best, but once you get back into the $40 or $50 range, or possibly even $60 range, those dividends are gonna be really, really nice. And the reason why I ended up getting some Carnivals was because I also do own some Norwegian cruise line stocks, but those don't give out dividends. So I really like Carnival just for its dividends. And at the time when I got Norwegian, it was because it was at a better price and better opportunity. But I definitely see Carnival being a grab right now, due to the fact that Norwegian Cruise Lines is literally at the same strike price as of right now, $19. So Carnival with dividends within a couple months, it'll be definitely worth the investment. Not only that, they have a 14.5 billion market cap, which is pretty decent, I guess, considering they have been closed for quite the time, and they've been hit like a truck due to this coronavirus. Not only that, if you look here at the options, I would say go with something more maybe safer, like a month ahead minimum, or I'd usually stay between the range of 2 to 3 months around there, or try to stay a little bit out there to get some time on the contract. But if you look here and go to like July 17th, I see the stock possibly going from like $20 to maybe like $30. I would say that seems something more reasonable, considering the airlines jumped from $15 to 21 in a matter of 2 days. So I mean, a month, I wouldn't be surprised if it went up from $20 possibly to $30 or something like that. So if we scroll down here and look, $30 for, not $30, yeah, $30 for like around a $30 strike price contract, pretty dang sweet. Possibly going with something more like 25 strike price seems pretty reasonable. And I hate how it keeps on going up like that, which I have no idea why, which is really bugging me. But there he goes again. Okay, well, 27.5 strike price for 78 cents, something around that range, around between the $20 mark through $25 mark would be the sweet spot. You want to take a look at all the dates. You want to get some time on the contract for sure, though. You wouldn't want to get it in the money, but have the contract expired. So if we take a look here at NHCL, why don't we look? Oh, NCLH, got that so wrong. But as you can see right here, it's currently at 1941, which is pretty much the same price as Carnival. I mean, as an investor, you would most likely want to go with Carnival for the dividends and then in the long-term game. But that'll be all for today, guys. Make sure you leave a like, subscribe, and if you enjoyed the video, make sure to subscribe, leave a like, comment, and leave any suggestions on what should be changed differently. Thank you very much. You guys have a wonderful day. Out.